Tesla led the market today. Dow gaining 146 points, S&P advancing 0.32%, Nasdaq climbing 0.35%. Tesla stock roared 15%. What happened? This is unbelievable. And it's also a perfect example of a CEO redefining the narrative. Now, here he is doing something no American CEO can do. That said, it's not a magical elixir for Tesla. It's not full self-driving. Competition remains stiff. No one else can pull this off, which is why shareholders love the guy and bid the stock up so much, making fools of last week's downgraders. It's almost as if
It's only the beginning because, in my opinion, they had to prove that the margin narrative was going to recover, and we witnessed a huge margin recovery for Tesla. And it all comes down to deliveries for the upcoming year, a 20–30% growth rate that was far more than everyone anticipated, including bulls like us. Let's pull out the popcorn, I believe. This is only the beginning of this company's journey to surpass the trillion-dollar threshold. The most underappreciated AI company in the market is still Tesla. We're discussing Mahomes in relation to other quarterbacks, after all. After all, they will be making 2 million deliveries the next year, so this is only a distinction from scale and scope. For many of these others, you're talking about between $100,000 and $200,000. The current capabilities of Tesla include growing its product portfolio. There will be a Roadster, a Semi, and of course, a Cybertruck. Going into next year, we believe that a car that costs less than $30,000 will be crucial as everything comes to a close. And look, a cab driver in New York City was pessimistic about Tesla going into this quarter. You and I have been discussing this for the past few weeks. The margins were displayed. They displayed the delivery. Furthermore, I do think that the bear's interpretation from robotaxi was incorrect. In the upcoming years, this will be an autonomous and AI tale. Look, Ark and Kathy are among the most ardent advocates of Tesla, right? They're in for the long haul, I suppose. It just illustrates our larger thesis if you look at their robotaxis concept and the direction that everything is going. The market's most underappreciated AI play is this one. We can shuck AI, autonomous all day long, and it boils down to margins, so I believe what we saw this quarter was a tremendous step in the right way. As you can see, their team margins improved by 200 basis points and will now reach 20% the next year. This stock has a 3 in front of it, though, if they even reach the lower end of the delivery growth range of 20–30%. It's not enough to merely watch Tesla's remarkable rise from the outside. With the most recent information on Tesla, stock price targets, innovation, and all things Elon Musk, Seeking Alpha is the one-stop shop for Tesla bulls and those with an eye for finding the next big thing in the stock market. Our channel may get a commission if a customer makes a purchase after clicking on the affiliate links in the description. I find it difficult to predict where this is all heading when I attempt to look at 6 months, whether it's the first or second half of 26. Because, in my opinion, Tesla's autonomous and AI narrative alone is worth $1 trillion. Therefore, it doesn't necessarily affect us in the short term if it pushes out 6 months. I believe the first half of next year will see the release of the car that costs less than $30,000. The margins are improving. Rebound in delivery growth, particularly in China. After that, you begin to examine every growth lever that could be there. You see, the bears are returning to their hibernation phase as a result of the past 24 hours. It's a tightrope, you see. It's obvious that this has been a contentious topic. However, I believe that despite all the clamor, the impact on us has been little from the standpoint of demand. Now, I'm not arguing that there can't be some anxiety about it in the future. However, the truth is that people will purchase EVs if you manufacture the greatest cars available. And I believe we've seen that with Cybertruck. 300 followed by bull case 350. This is still an AI play for consumers. Take away the popcorn. Next week, big tech will be strong. China, in my opinion, will be the main force behind that. Look, this was far better than everyone anticipated, since street rumor statistics were ranging between 10 and 11%. Together with that margin jump, that optimism is crucial. When you combine the margins and that delivery outlook, this quarter truly resembles Aaron Judge. Bulls will be thrilled, you see. It's actually gains in market share, in my opinion. In fact, you're beginning to notice that the price reductions have slowed down. In China, you're beginning to see increases in market share. September was their greatest month ever. 40–45% of deliveries are that amount. After that, you add certain indications of strength that, in my opinion, will improve both in the United States and Europe. The main thing is that you will have a car that costs less than $30,000, and I believe they emphasize that even more. That is the goal, as far as we can discuss autonomy and artificial intelligence. The future is that. The focus is on profits and deliveries, and I really believe that last night was the turning moment in the Tesla narrative. Between the bulls and the bears, I believe it sharpens the blades, because the bearish will argue reduced ASPs, missing gross margins, and further price reduction. However, I believe that this narrative is about artificial intelligence, robots, robotaxi, and a price stability that is taking place, as well as demand that is finally beginning to turn the corner in China. Because you have the facts, I am really more optimistic about the Tesla autonomous robotaxi tale today than I was 24 hours yesterday. I think it laid out what I hope would be a prototype of sorts, and I'm really quite optimistic about when they'll start to see a dent. Maybe this year, I think possibly into next year, he remarked. 3 months ago, you clearly had the stock at 140, and the bears were predicting that it would drop to 100. Take a look at it now. The key is that investors are now beginning to understand the AI story, which is why we are where we are today. The most underappreciated AI play, in my opinion, is Tesla. We believe that the value of AI alone might reach $1 trillion. In terms of pricing and demand, this name is also stabilizing. We have said it, we have discussed it in public, it should go without saying. For me, the main focus is on Tesla's increasing emphasis on the AI narrative, and I believe that's what investors are looking for. From the start, I have never thought of Tesla as an automobile manufacturer. It's a disruptive technological name, in my opinion. However, this is the reason why, look, today the bears will emerge. Miss, they're definitely on the margin. The stock is down because of this. However, I think that in a few weeks or months, investors will begin to pay more attention to 1010. Margin, 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 I believe. That has in fact been a major contributing factor to the story's overhang. They outperformed by 200 BPS. The days of price reductions are over. When you add it to the growth projection, I believe the rumor estimates were between 10 and 11%, they contributed between 20 and 30%. This quarter is reminiscent of Aaron Judge. Yes, I believe that during the first part of next year, you will have a car that costs less than $30K. And all of that, in my opinion, fits into their total growth projection of 20 to 30% starting in 2025. When you consider their capacity to manufacture automobiles and their cost of products, you'll see that they've eventually reduced it by 30 to 40%. If you look at the next year, it may be down another 20 to 30%. Without a question, EVs and weaker demand have had a difficult year. I believe that the current margin renaissance of growth is continuing till 2025. Then there is autonomous AI and many additional development factors, I believe. That, in my opinion, is crucial to the market cap of at least $1 trillion. The bears that have been pessimistic since the market's value was around $100 million will, come out of hibernation mode today. In actuality, however, they will create more than 2 million cars in the upcoming year. Additionally, there is better penetration on FSD when considering the total growth narrative. Last night, Elon provided, I believe, a lot of further information about autonomous, FSD, and cybercab. Perhaps some people were disappointed with RoboBulls today. Now I wasn't. Look, it's just execution now. However, I think this story's poker chips are the most underappreciated AI play available. In the next 2 to 3 years, you and I may end ourselves in a cybercab. Therefore, we're not discussing something that will happen in 5 to 10 years. This is something that will come to pass in the upcoming years. And this isn't necessarily a bad thing for Uber, in my opinion. Of course, Lyft has its own problems. However, if you look at Tesla, this will be the next phase of development: autonomous, FSD, and AI. But in the end, you need the margins and the delivery. They are fulfilling every requirement. In fact, I felt that was maybe the nicest conference call I've heard from Tesla and Musk in a long time. Sustained in the next message.